And we're live again. Thanks for coming back, guys. Today, I want to talk to you about selling life insurance. So, this is for the person who's getting into the business of selling life insurance or who's already in it and wants to maybe learn new skills or look at a different way of doing things. Now, if you're somebody who's looking into life insurance yourself as a customer, you might want to stick around. There's some things you might want to learn. But I want to talk to you about my experience in selling life insurance. To give you a real quick of a background, I actually I got my insurance license when I was 18 here in California. And then at 21 years old, I got my life license. And that's when I began learning how to sell life insurance. But just passing the exam, obviously, doesn't mean you know how to sell life insurance. So what I want to share with you guys in this video is where just the different skill sets that I learned to become a better salesperson, but at the end of the day, provide more value. And when you provide more value, I believe, to a customer, you get compensated more for it. I believe that we get compensated based on the size of the problem that we solve. So in sales, if you can solve a really, really complex problem, like getting somebody life insurance that has never been able to get it, then you can get compensated very well for that. In my background, when I turned 23 years old, I moved completely away from a salary or hourly position. And through the sales of life insurance from the year 2013, so I was 23 years old, I was living off of the commissions of the life insurance sales. Now, living at home, didn't have a family or anything, I was able to do that. And I was making somewhere between $40,000-$50,000 a year in commissions. I remember one of my biggest years was around $60,000, $70,000 commission only. And then something happened where I was able to cross the six-figure mark. And I'll share with you guys how I did that. But first, right off the bat, you need to know your product very well. I did this by shadowing, by learning it, obviously, by studying, but also shadowing people who were really, really good. These people were within the company that I represented here in California, and I worked for them as a sub-producer type of capacity. So I was not on an hourly, I was not on any sort of salary with them, but I was getting paid, and everything that I wrote in terms of life insurance, they would get credit for. So they had an incentive to train me. Now, one person eventually saw that I was growing and didn't want me to grow more, and they didn't want to offer me more as a split commission, and so I eventually left them. Until eventually I ended up with another mentor and then on my own. So I'll get into that. But a couple things to look out for. Look for people, if you're going to shadow, that are part of financial organizations of achievement. For example, like $1 Million Round Table of professionals. I became one of the members of the $1 Million Round Table, and I know it takes a lot of work. So if you can find somebody who's already a part of that, you already have an advantage. Now, this is through the $1 Million Round Table. You can look it up online, but it's very respected within the financial community. That being said, you got to know your product really, really well. You have to know the ins and outs of life insurance. But on top of that, you have to be able to read the customer. The hardest thing is getting in front of somebody. So you have to figure out a way to get in front of the person or over the phone, sell them. And I think that simplicity is one of the keys to success. I think that many times in the financial industry, we make things more complicated to maybe sell more, with the belief that the more complicated it is, the bigger we can sell. But the reality is, the way that I see it, is people want simple, right? And I say life's already complicated, so let's keep things simple for customers. So I like to break things down when I would sit in front of a customer and just tell them, look, there's really only two types of life insurance policies. You have term life insurance and the second type. And we'll get into the second type in a moment. But the first type of life insurance is very straightforward and simple. It's term life insurance, and that T stands for temporary. It could be 10 years, it could be 20 years, it could be 30 years. But at the end of the day, it's temporary. So then I go into explaining it's like renting, and I'm sure you've heard that. You can rent for 30 years, but at the end of living at that home for 30 years, if you decide to move, you can't sell that home. And most term life insurance policies work the same way. You can be covered, you could pay the same premium, you could have the same coverage for 30 years, but at the end of the 30 years, if nothing happened to you, which is a good problem to have, there's no money back typically. There's no equity. You can't sell the policy. You can't sell the property. It ends at that point. And so I would go into explaining that to the customer. Now, one of the really important things, once I would explain the difference between term life insurance, and then I would get into the second type of life insurance, which was universal, whole life, index universal, permanent life insurance, right? People are very confused because there's lots of different ways. So what you want to do is simplify it and let them know that there's the second type of life insurance that builds equity. And that plan you can have for 30 years. And if you decide you don't want it anymore, there could be equity built up in that plan. Now you want to check with your state and the insurance, the company that you represent and the type of policy that it is. But I was writing many times life insurance policies that had a guarantee return of premium type of option. So for example, you could pay into it. It's a universal policy. You could pay into it for 20 years. And if you decided you didn't want it after the 20th year, some of them gave you 100% return of premium. Those were mostly for the really young and very healthy people, but it existed. And then some of them would give you like 90% or 85% or 70%. All of that was based on the age and the health rating of the person. And I go into explaining that too when I sit down with a customer. And full disclosure, I'm no longer in the industry actively, but this is how I made it to the $1 Million Round Table. I would keep things really, really simple for the customers. I would tell them there's 2 types of life insurance, and then I draw it out for them. And then I would tell them there's really only 2 types, right? And then as more questions develop, I would share more. But really, I would only provide about 3 different options. And that was based on listening to the customer. So that's one of the big things is first I would showcase to them what the types of plans were. And then I would get into what's the purpose of the coverage, and then kind of look into what they call finding the need for the coverage. Now, how do you determine when you're in sales what the appropriate amount of coverage is for the customer? What's the appropriate amount of life insurance? And there's a couple different ways to look at it, but one of the ways that I saw that was really valuable was you can do a simple analysis. You can say if your current income is $50,000 a year and you have a newborn baby and you want to make sure that they have your income in case something happened to you for the next 20 years, then you can multiply, real simple math, $50,000 a year times 20 years. And that would give you $1 million life policy. And you could say you could have this policy for the next 20 years. And you can write a 20-year term for $1 million. And that would basically give an income if something happened to the customer tomorrow, God forbid, but it would give an income, a lump sum of $1 million, which they could then draw $50,000 a year for the next 20 years. That's a very simple analysis. It's not meant to be the one solution fits all, but it's a way of solving the need, right? Now you can say, okay, well, if the income is $50,000 a year today, in 5 years, they're going to have higher income. So that doesn't account for inflation adjusted, and you can pull up calculators and you can do all those things. And believe me, if you really, really want to excel in this, I would recommend to get into those studies. I personally began the what's called the CHFC, which is the Chartered Financial Consultant, which opened my eyes because there was so many more ways of determining the needs, looking into different situations that the customer might be in. If they have like a special needs child, they may need a special needs trust. If they have a business, they may need key person, they may need buy-sell agreements. All of those things you can learn, and it will make you a better salesperson. But at the end of the day, simplicity is king, in my opinion, and that is what worked for me. Whether I was selling on the phone a life insurance policy or whether I was selling in person, I really, really wanted to keep things very simple. I'm not going to pretend that I started this way, okay? The way that I first started with life insurance is I would present a ton of different options. And notice I call them options. So when I present to the customer, I just say, look, option 1 could be this, option 2 could be this, and option 3 could be this. Then they will give me feedback based on the price, based on the coverage, based on what they want the plan to do. I will tell you, in sales, many times 99% of objections are in our head. That's what I like to say. That's what I believe. But many times in sales, we actually are already telling ourselves no before we even give them the product or the price. So for example, if $1 million term policy costs them $300 a month, and it's a 20-year term, you have to be okay with showing them $300 a month, okay? Because what happens there is that if you say, oh, you're assuming they can't afford it, then you maybe are doing them a disservice, because maybe they can afford it. If they can't afford it, then you have to give them other options. Because at the end of the day, we're looking to solve a need. And I believe that something is better than nothing. That's my opinion. So if you're looking to solve a need and protect their family or a business or whatever situation, you have to listen. So I like to look at it as like a teacher teaching the student, and that student, once they're best prepared, or once they've learned the information, they can now make the best decision for their family. It doesn't mean that they're going to make that decision. So for example, you can spend a ton of time. By the way, an appointment, I really think the optimal, having ran hundreds upon hundreds of life insurance appointments, maybe even in the thousands, because I was doing this for over 8 years. I believe that the optimal appointment time is somewhere between an hour and 15 minutes. Can it be done in less? Yes. Can it be done in more? Yes. But once you're pushing an hour and 30, 2 hours, it might be a little bit more in depth, more complicated. So there's a couple ways to avoid it getting there, and you have to be conscious of the customer's time and of your time, right? When I was first starting in the business of selling life insurance, one thing I'm going to tell you that I struggled with at the beginning was getting over the fact that I was a life insurance salesman. I don't know why. This was something that I struggled with, that I was somewhat embarrassed to be selling life insurance. It was just something that, I didn't want to share it with too many people. I didn't want people to think I was extremely pushy. And so that was a hurdle I had to get over with. Once I got over that, I began to do a lot better because it was just a mental block. So step 1, I would say, is get over the fact that this is what you do and this is how you make a living. And then step 2, look at it as you have the ability to help a family, a business, somebody else. You You're the difference between them being covered and not. Now, does it mean that at times it's pushy? Does it mean that at times that's what you need to figure out? Because I have never liked being a pushy person. However, there's a difference between someone who's pushy and there's a difference between someone who asks for the close, asks for the sale. And in sales, and specifically in life insurance, we need to ask if this is something they want to do. And the way that I would ask after presenting, listening, hearing them out, answering any questions that they had, I would ask them, does this sound like something you'd like to get started? And if the answer was yes, right then and there, I began taking the application. Now, the process of taking the application is going to add more time to that appointment. But right then and there, you do it. You do it, like we say in Spanish, en caliente. You do it while it's hot, right then in the moment, because they've said yes and ready to move forward. If the answer is no, then you ask them, well, what is it, right? An open-ended question. What is it about that you're still not sure about? And let them answer and really, really listen to the customer. See, I believe sales equals psychology. Sales equals an understanding that it's a dance. You know, if you ever dance salsa or tango or any of these dances, you realize that it's a back and forth constantly. It's a push and pull constantly. And you have to lead and then follow. Lead and then follow, right? That's part of the dance. In tango specifically, the man leads and then he leads the woman and then he follows. In salsa, the man many times leads, right? Most of the time the man leads the woman in salsa. Here in life insurance sales, you lead the customer and then you follow. You hear them out and you listen. Now, if you show up at an appointment and somebody's not interested, then address it at the very beginning. You know, if it's something that they don't want to be there, if it's something, you know, I prefer to address it then and there. Any doubts, anything, if they have their arms crossed, they're not in the conversation, if they're not asking questions, if, you know, it's not a pitch. The way I look at it is a conversation, a dance, and it has to be a back and forth. If it's all one way, where you're just talking and talking and talking, you're really not going to find out the needs of that customer. You're really not going to find out what questions they have or objections or whatever the case. So that being said, one of the really, really important things in life insurance sales is not just closing the deal, but the back end part, which is the underwriting. And I think the underwriting is just as important as the front end, which is the actual sale of the policy. Because no matter how big a policy you sell, and you're really excited for that commission, which in the life insurance world, when I was in that world and I sold my business, my life insurance and investment business in December of 2020. But when I was in that world prior to then, the commissions can range somewhere between 60, 70, 80% with a captive company. And then if you are outside of the captive and you're an independent life insurance, you could be even, from what I understand, over 100% commission. So that means if you write a policy where the customer's paying, let's say, an annual premium of around $1,000 a month, that means you can make somewhere between $900 to $1,000 in that one sale once the policy is issued. Now, the one thing I want to tell you that's vital to success in life insurance is taking care of the customer. Because through that one customer, they're going to end up referring you if you take care of them. They're going to end up coming back to you when needs change in their life and they need additional coverage or changes. They're going to come back to you. They're going to be potentially, as life goes on, You want to be a part of their growth. And that's one thing that I think is really important. And I think it's missed many times with new professionals that are getting into the life insurance world. It's just a one-time sale and then you're gone. That's a big flaw in the industry, and that's one of the reasons that that large commission up ahead at the beginning can be a good and bad thing. Just because you got paid once on the policy doesn't mean that you don't continue to take care of them. So the way I would look at it is that the more you take care of them, and I would strongly recommend doing an annual review every single year, calling each one of your clients and reviewing their policy. And if you listen to any talks of any of these guys that have reached, guys or gals that have reached very high awards and accolades in the life insurance industry, they do annual reviews. They find a way to get in front of the customer. They find a way to talk to the customer every single year. Some people with their highest net worth clients, they even reach out every quarter. I think it is very important, not with an angle of selling them something, but with an angle of servicing, with an angle of keeping them up to date, keeping their policy up to date, making sure the beneficiaries are in order, making sure the address hasn't changed, making sure phone numbers are in order, making sure the coverage for the family is still adequate. All of those things. So going back to the coverage amount, there's several different ways to look at it. You can look at either replacing income, or you can look at debt cancellation. That's two ways that I like to bring it up. So when I'm sitting with somebody, I'll ask their income, and don't be afraid to ask for that. And when I would sit with them and I would say, if we were to replace your income, here's one way to do it. And then I would say, if we were to do a debt cancellation, here's one way to do it. And if they have a mortgage, if they have student loans, if they have any certain outstanding debts that they wanted paid, final expenses, things like that, that wouldn't be a debt, but that's something that's a one-time payment. All of that can be resolved with the life insurance policy. Again, knowing the product really well and all the intricacies of it is very important. But no matter how well you know your product, what I believe is more important is the ability to convey the information to the customer in a way that you're not being pushy. You're doing it in a way where it's coming across more like educating. You're doing it in a way where they see that you're going to be around to take care of them should something happen. And the longer you're doing life insurance and selling life insurance and becoming better at it, they will see that you're taking care of them because you're reaching out every year. You're making sure that if there's anyone else in their family that you can help, you're going to help them. If there's any referral, but look at it like you're not just taking. A lot of people, say, oh, I don't leave a house unless I get 5 referrals or something like that. And there's something to be said about getting referrals, and I think that's one of the best ways to get business, but I never liked that. I looked for other sources of leads. I looked for other sources of getting in front of people as opposed to asking for 5 referrals before I leave the house. Now you get into the different companies and their approaches and what their models are, and you have the Primericas and the New York Lives and the all these other companies, right? They have different philosophies. But I will tell you this, without talking bad about any of those companies or any other companies, because I never like to talk bad about another company that's like a competitor or something like that, because you just don't know. You don't know the full picture. You don't work for that company. You don't know the details. Unless you've done a very thorough investigation, then you can talk bad about them, right? But I will tell you this. I believe in the sales of life insurance. I don't believe in the sales of recruiting. And so the company that I represented when I was selling life insurance in California did not offer any type of recruiting incentive. There was no multi-level, there was none of that stuff, right? Multi-level marketing, none of that. It was purely sales of life insurance and taking care of the client. I like that a lot because I think that when you try to sell somebody a life insurance policy, and on top of that, you're trying to recruit them as an agent to work for you or a producer, I think that there's a conflict there. It could work. I'm not saying that it doesn't. I'm just saying I personally, my philosophy is take care of the client. That's the number one objective. Don't try to recruit them. Don't try to go that route. It will cloud your judgment, I believe. Again, this is just my approach and my philosophy. That being said, if you take care of that customer so well, they're going to be referring you people, and you can grow your business and you can hire producers and different things like that. I had two team members that were on my part of my team, and they were on a hourly rate, and they would set my appointments and schedule my day and help with some of the back end things. But I never had any sales producers under me. I was doing all of the sales. And I became very, very good at selling life insurance because I knew how to talk to people. I knew how to read people. I learned how to listen to people. And then I knew the underwriting part. And I want to touch on that one more time because I didn't go too in depth on it. Underwriting is just as important, if not more important, than the sale of the life insurance policy. Remember, when you sell a life insurance policy and you take all the payment information and you take an application, they still need to go through underwriting. Those underwriters need to become your best friends. They need to know you on a first name basis. They need to know, you need to have their contact info. You need to know the underwriting rules backwards and forwards because it will make you look great in front of the customer. And you can also pre-qualify the customer. And I really, really liked doing that. Before I would even sit with a customer, I wanted to have a little bit of a basic age, height, weight, medications, any health history, smoker, non-smoker, all that stuff. I wanted to try and gather that before so that I didn't waste the customer's time. Because if the customer is not eligible for coverage, you're essentially wasting their time and yours. You want to let them know. If a customer isn't eligible now but will be in 6 months or a year, you want to let them know. If a customer is eligible but at a higher rate, you shouldn't be quoting them the best rate. You need to give them the appropriate rate, and that's what will separate you. See, I remember meeting with some customers and they would tell me, oh, I'm getting such a lower rate with a different company that I got quoted. And I said, okay, did they ask you these health questions? Because based on your health history, this came up, this came up, this came up. And they said, no, they didn't. I said, okay, well, it may not be adequate. Double check. And that separates you. That separates you, and you're showing that you're not just there to make a dollar. You're there to provide value, and then you'll get compensated. And remember, don't look at it as purely as a money situation. I will tell you this. One of the things that I loved to do and I became extremely passionate about is getting people coverage that had previously been denied. For me, that was one of the biggest rewards. And I remember one in particular that I went to. This was a policy that was being paid for by he was a CEO of a company, and this policy was being paid for by the company, and it was paid for as a benefit. However, this person, being young and all and healthy looking, had a history of a heart condition, and it was rare and it was a little complicated, and so he had been denied by another insurance company, life insurance company. So I get my hands on it. I get referred this customer, and I said, let me see what I can do. I gather a ton of information ahead of time. I think I even gathered some labs ahead of time, sent them over to my underwriter, had them take a look at it. Shout out to those underwriters. And Sure enough, I get a rating based, a higher rating, but it was based on the appropriate rate because of the health condition. However, the underwriter said, look, this is something we think we can do. Send it in, have them do the labs and we'll pull medical records. Sure enough, something pops up once we wrote the policy. It was a big policy. Something pops up, and we ended up needing a letter from the doctor clearing some questions that the underwriters had. The doctor wrote a letter, and sure enough, we get the policy approved. And I remember they paid it annually, and I believe the premiums on this one were somewhere around, between $8,000 to $10,000 a year. And I remember that was a big deal, because on those types of policies, I think, commissions were somewhere around, 80% or so, something like that. So it was definitely like a, let's call it a $7,000-$8,000 commission that I made on that one policy, somewhere in that range, right? And I remember feeling great about the commission that I made, but more importantly, I actually felt really fulfilled that I was able to cover him when he had previously been denied. If you can become really good at pre-qualifying the customer, getting with your team in underwriting, learning the underwriting guidelines, have the underwriting guidelines like on your desk or on your computer, like memorize them. Know all these things. If somebody has high blood pressure and is a certain weight, you should know the rate class. If somebody is a smoker and a certain weight and takes metformin for diabetes, you should know the rate class. If somebody's had diabetes for only 2 years, you should know the weight class. If somebody has an A1C and diabetes a very high A1C and diabetes for the last 10 years, you should know the rate class. All of those things you need to become good at, and you become better at it by shadowing, working with somebody, a mentor that's been in industry for a long time and has achieved accolades by the industry. You can study on your own through something called the American College of Financial Services, which is what I did, and I began the CHFC, which is a great program, and I'd recommend the Charter Financial Consultant. I'm not tied to them in any way, but this was something really helpful to me in my career, because it gave me a better understanding of certain complex situations, and also getting over the fact that, hey, this is how we make a living. You're in sales. It's a great opportunity. And don't be afraid to give a large number to the customer and let them say, hey, that's too high, or you know what, I was thinking something a little higher, right? You just never know where they're at. I'll go ahead and link in the description the American College so you can check into that. But I hope this was helpful. And this is, again, for anyone who's thinking of getting into the business or is in the business and wants to maybe just have a different approach. This is how I did it. And I hope this is helpful to you. Thanks for watching.